Hey guys, Czar here. Good morning to you. Hope all is well. Trust you're having a good morning so far. It's 9:29, almost 1 minute to the open of New York regular trading hours. This is the Three Sisters, NASDAQ, S&P, and Dow. Volume weighted average price, VWAP, is that blue wavy line in the middle. And 2.5 standard deviations, the red lines either side of that. Before the open, of course, the marker showing the prior day's low. So you can see we're trading all the way down here now at the low of yesterday. You see that there? There was the low that was set in Europe on the NASDAQ yesterday. Let's see how we do today as we open things up here. And I'll be cutting out dead air, guys, sideways grinding action, non-teaching moments. Keep this video nice and tight as always. Let's take a look at the power grid. This is what I trade from, daily up in the top left, 30-minute in the bottom left, and 1, 2, or 3-minute chart on the right-hand side. I'll start off with the 1-minute chart here for the first little while, and maybe move to the 2 or the 3-minute later on here after things get going. I use 30-minute zones as my primary guide to what's going on from a structure standpoint, but I also look at individual candles, of course, to garner some perspective on that basis as well. You can see that we're sitting on a zone right here, a zone marker, which is at the top of a clean traffic zone. You see that there? Just 2 candles worth of price action. Did all of this on the way up, and now we're going to see what may or may not happen on the way down, if in fact we come into that range. And market is open, guys, as you can see. I'll put you on the Three Sisters so you can see the opening range forming. I have an open range indicator on this. You can see those pink lines. You see that pink line down there? One at the top, one at the bottom. And of course it's not set yet. It'll be set. The 1-minute open range will be set after the 1-minute candle is complete, which is in about 10 seconds or so. And there we go, guys. There's the 1-minute open range. It has been set for the day on all 3 of the sisters. And now we wait and watch. I'll put you on pause and we'll see how this thing develops, and maybe we'll have a trade in here. Who knows? Be back in a bit. All right, guys, watching closely here. S&P. Stop sell order, guys, below. I'm going to bring it over here so you can see why I'm doing what I'm doing. This is my temporary, this is my starting point here, guys. I could be shifting this quite significantly here as we proceed. This is what I want. I want a tapping of the open range in a perfect world. Watching the Three Sisters, let me just show you. NASDAQ pulling up. There's the S&P, the one we're looking at. Into the open range now. Dow, of course, above the open range. Stop above. Entry here, guys, below that candle right there. You see that? And stop above. I'll be right back. Getting ready now. I'll fix those markers in a bit. But the stop is above that pre-market high. See that there, that pre-market pivot? Now you can say that this stop is, or the entry is just below this blue candle you see there. And I'm in, guys. I just got triggered in right there. Just by a hair. Oops. Undo. There we go. All right. And so my primary target on this, guys, is 1R. To show what that looks like, there's 1R right there. And then more extreme targets of 1.5 and 2R. See if we can get there to watch how the 4 sample models play out on this. But my primary target on all of these trades is to get 1R before getting stopped out at the original stop. And you'll see at the end what those 4 models are. Let me just explain it very quickly. It's 1R all or nothing. Then there's 1.5R all or nothing. And there's 2R all or nothing. But there's also a 2R move stop to break even at 1R. In other words, if prices get to 1R, the stop goes to break even for that model. The all or nothing models mean there is no moving of stops. There is no tightening of stops. It's either it hits the target of 1R, for instance, or it gets stopped out at -1R. So it's one or the other, all or nothing. Same thing with the 1.5. Either it hits the 1.5R or it goes all the way back and gets stopped out at -1R. So it's win or lose. There is no break even. It's only the 2R move stop to break even at 1R that has an opportunity to break even. Hopefully that makes sense. I had a couple of questions on that. I'll put you on pause now, guys, and we'll see how this plays out, and I'll bring you back. And there it is. After all this time, it looks like we had no chance on this one, but this was a good setup. I'll walk through the setup here in a moment, but all 4 models took a charge in this one. -1 for 1R, 1.5R, of course, 2R all or nothing, or the 2R move stop to break even at 1R. How long was I in that trade? 9:42 till 11:02, so I had to sit in that for quite a long time. Pretty hairy there for a while. Almost got stopped out here by a couple of points, and then eventually, of course, stopped out on all 4 models. This is the setup, guys, that I would take 10 days in a row without even questioning it. It's a optimal setup, and this is what it is. It's a trend continuation trade. So double top, big double top here on the daily, of course, bearish candle, bearish 2 or 3 days, 3 sessions here. Of course, Monday was a holiday, but dropping down at the time, of course, prices were also below both the 9 and the 21 EMA at the time of entry. On the open of New York, we sold down pretty hard, as a matter of fact. Of course, we're looking at it, at the time like this, and then a beautiful orderly pullback with a negative moving average configuration, bearish 30-minute configuration as well. 1, 2, 3, 4, 5 candles into the 21 and into the open range, the 1-minute open range, topping wick, breaking down, and then entering the trade on this break of this bearish shift candle. Again, below both the 9 and the 21, and the 9 being below the 21 in a bearish 30-minute and a bearish daily environment. This is an optimal setup. It's one I would take 10 days in a row, as I say, or 100 days in a row, and toss the coin and call heads. Why? This is a weighted coin. The coin is weighted towards heads, and so I call heads. But even a weighted coin can land on tails sometimes. It more often lands on heads, but not always, and this is one of those times. This is what's known as a routine business expense for a trader. A coin that's weighted to heads, in other words, a long-term edge in its favor with optimal setups, which can still land on tails, especially a day with a lot of news happening like today. Thanks for being here, guys. Appreciate you. Thanks for saying hi in the comments, for clicking the like button. Have an amazing afternoon. We'll talk to you soon. Take care.